All right. Well, good afternoon, everyone. Joe Pochodyniak here with McNichol and Associates Asset Management. Really excited and pleased to welcome Bruce Croxon, the managing partner of Round 13 Cap. Certainly an individual that needs no introduction here on Bay Street, but we're going to give him one anyway. We are in one of the Round 13 LPs. It does have a focus on technology, which is really important. And there's a sort of a Canadian story here too. So Bruce, welcome. Thanks for doing this. And how are you seeing the lay of the land over at Round 13 Cap?
Well, thanks, Joe, and thanks for having me on. I mean, as you know, we've been at this since, formally since 2000. You guys on the second fund since 2019. So there's been a lot of change in that period of time. And I'd like to think, that Round 13 has sort of moved with the times, and reacted accordingly. And, long story short, we were very focused on software as a service companies. And I should say, our focus is primarily Canadian domiciled companies with global audiences. And we are a combination at Round 13 of operators and traditional investors. So we are, as a vision and as a result, very hands-on in the companies that we invest in. We try to be the most active board member, et cetera. And I think as we look back, the changes we've largely seen, software as a service was a very compelling asset class from 2019 to 21. At which point the multiples, if as you recall, went sky high, and we did our best not to follow that trend, and at that time shifted to sort of a couple of e-commerce plays as COVID was starting. The e-commerce market was taking off, and then as we've come out of that and e-commerce had its day in the sun, what we're finding now is the software as a service multiples are coming back down to sort of investable levels. We are focused in our fund too on the bets we've made now and making sure that we make that shift from investing in supporting growth, and then more and more we're having an eye towards how we exit these in a timely manner in a market that thankfully I think is, from a multiple perspective, is now off the bottom in terms of software multiples, and we hope to be part of that trend in the next couple of years. And along the way, I'm not going to lie, there was some challenging times in the software industry where money was invested ahead of a company's ability to take advantage of it often. And we are in a couple of situations in Fund 2 where we are recapping, and you're tempted as you look at the reports on a mark-to-market basis, say, oh geez, it looks like you're taking a write-down. Well, in many cases, as you know, when you restructure the shares and make sure you're at the top of the stack, you're actually putting yourself in a better position. So there's been 18 months of really hard meatball surgery and adjustments on a number of companies. But I'm actually, as we sit here today, feeling more optimistic than I have over the past 18 months when small cap software took a pounding, that we are actually on our way back up to multiples that we'll be able to sell into and realize returns for our investors.
Right. Yeah, and I think that's a great point on the exit side. And, just to sort of provide some context, and you probably already know this, a lot of our investors here at McNichol Bruce, good long-term investors, they understand kind of the cycles of financial markets kind of at a broad level. They're not an expert like yourself, but they can withstand the test of time. And that, over the long run is really how you build your wealth. Just on the exit side of it, you touched upon kind of reorgs and refinancings. Are you finding now more and more investors are coming back to the table to have those exit discussions, whereas like a year ago you couldn't even line up a meeting type of thing, or how's that all working?
Yeah, that's exactly what goes into a recovery, because as the cost of capital comes down, there's more strategic companies now. Instead of like everyone, we went through an 18-month period where the focus abruptly shifted from growing the top line at all costs, right, regardless of how much money you were burning, to, okay, hold on, the multiples aren't supporting that now, the market's telling us something different. Let's abruptly focus to profitability and everything that entails, like layoffs, cuts in marketing spend, trimming back on the R&D, and everything except pure AI plays. I would caveat by that. And and I think what's happening now is as you emerge and the markets, the big caps are obviously recovering. Eventually, the smaller caps get pulled along, and people start to get their confidence back, and that includes strategics that are willing to now make strategic acquisitions, whereas before that was just just not in the realm of possibility as they were looking after their own shops.
Yeah. Yeah, no, for sure. One of the things that I love about you guys is sort of the Canadian focus, the Canadian quality companies. Silicon Valley and these other parts of the world, they get kind of all the attention, but we've got some really great, bright, smart people here. I've actually got two nephews in university down in Waterloo, and when I was going through the system, I remember Waterloo being sort of the tech, triangle or whatever it was called. But as I understand it, through some of the stuff your firm puts out, there's a great growing tech sector in Ottawa and other places of the country. Talk to us a little bit about that and the whole brain drain, right? Because nowadays, if you've got a youngster at home, you might want to say cool it on that comp sci or engineering degree. You might want to encourage them to pick up a hammer or learn how to do a trade. So what would you say to something like that?
Joe, that's a very multifaceted question asked me there. So let me try and break it down. For the past 15 years, I think we've put out the best engineers in the world out of that area of Waterloo that you talked about. And if you don't believe me, just look at all the foreign nationals with offices up here that are poaching them.
Right.
Unfortunately, for many of those years, being aided by the Canadian Shred Credit program that went to foreign companies with the IP then going off, separate topic.
Yeah.
But so we've long been recognized for that. At round 13, we took the decision that, it was really a risk management decision. A, we thought there was more than enough to do in this country. B, we thought we had enough talent and we're coming of age as venture capitalists because we have lagged the US in terms of just maturation of the industry. And if we're seeing a deal from the Valley or even from New York, you got to ask yourself, with all the capital that's down there, the first question, why is it on our desk, right? Well, how did it get by all the money down there? So really it was to us, like, if we're going to stick in Canada, as long as there's enough opportunity, which we feel there was, it took a lot of the risk out of our investing because there wasn't too many people. It's a big country, but it isn't. Like, there, you can get to, who's who. So you mentioned Ottawa. Yes, we were right on when they started to emerge as, off the back of a couple of big companies there, Terry Matthews. And then even a place like Calgary, as like they've long been reliant on and victims of oil and gas boom bust. And they finally start saying, look, we need some other stuff. Our office buildings are empty now. When the last bust happened, we got to start working our way out of this cycle. So they actively invested in ecosystems that are now producing results. A company named Benevity sort of led the charge out of Calgary. You might recognize that as a corporate giving platform that a number of corporations use. When you have success, it begets success, and you start to build ecosystems. So I think the country is in good shape. Now, from that perspective, the caveat that I'll give, and, it's rearing its ugly head again. We successfully led a charge to beat this back 4 or 5 years ago when they wanted to, put more tax on capital gains at the same time as the government coffers have gone up. The payroll's gone up 50% since this government came into power. Like, we've kind of lost our way geopolitically, right? So you can have all the talent in the world and all the great schools, but if you don't set up an environment conducive to taking risk, which that capital gains hits the angels and seed investors, which we rely on to get these things off the ground.
Right.
Things all have to work together. And, I think we're at the risk of, I don't want to turn this, I know you don't have me on for my political commentary, but I think we're overdue, right? We need to change this up because it's the best country for starting a small business in the world, but it's getting increasingly difficult as the risk taking isn't recognized and supported. So, heads up there, but still there's no place I'd rather be and no place I'd rather be looking at talent and companies. I just hope that we can get our act together, on that end to support what we do have and the assets that we do have moving
Yeah,
forward.
yeah, absolutely. And we also don't want to be political here, but I was speaking about Waterloo and a lot of the things he said. Jim Balsley was doing a forum down in Waterloo a couple of years back, and that kind of in a nutshell is what he said is forget about Series A, B, and C rounds. Before you even get there, you need angels, you need pre-seed investors, you need people that take on that risk. But unless you have sort of a culture and a framework for fostering innovation, no one's going to pony up the dollars to take that risk, right? So again, not to be political, but it sounds like this is political. And in order to drive kind of the innovation in our country, we need leadership in Ottawa to take this by the reins. Am I right?
100%. Like, as I'm fond of saying, most startups don't make it, right? So it's the riskiest category at the riskiest stage that you can cut a check into. We don't do that. We wait for the winners to emerge and, are happier to pay a higher multiple for success and certainty. So it's a much more conservative way to play venture that we've opted for. But without those early stage funds and individuals largely and angel networks, we'd be nowhere, right? And there just doesn't seem to be that recognition that it's a risky enough endeavor as it is, without on the few times you get a win, wanting a bigger bite on the gain, right? Just like it's not the place to be saving or making money at the federal level, in my opinion.
Right. And speaking about that federal level, and I have to ask, and again, I know we said we wouldn't be political, but we have a new administration coming in south of the border. That individual is very colorful and lively. Do you see any of those potential policies impacting the way you make investments?
Well, yeah, I mean, he's, the obvious outcome is that there's no debate that he's very, very, very pro business and very anti-tax and very anti-regulation. So to the extent that we're their neighbor, you either sort of keep pace with a pro business climate, or you really do risk making the hole we've dug ourselves fiscally worse. So to that extent, with no comment on appropriateness of leadership or what have you, but the policies are clear, and we have to respond, or else we're going to be a poor cousin. And unfortunately, this last capital gains round, which has not been officially put through yet, thankfully, or I remain hopeful, was the nail in the coffin for a lot of people that I know, that have actually fled the country
Right. Right.
with their balance sheets. That can't be a good thing. That's never a good thing, right? We need homegrown support, and we need policies that encourage risk taking and keep pace with the much more powerful neighbor to the south. So I think it's a wake up call, and I think we need a change in government to actually give ourselves a shot. There, I said I wasn't going to be political, right? And there, I couldn't help myself.
No, and I mean, we agree 100%. I mean, you've got, not only smart. I mean, when smart people leave, the first thing they do is they take all their smart money with them. So, anyways, Bruce, this was really exciting for us, and I know our investors are aware of the relationship we have with your company. So, thanks very very much for doing this. One final question before we go: if we were to have you back for a podcast in 2 years, 24 months, what would you say the landscape in tech and innovation looks like then, from a Canadian perspective?
Well, we got a new government. The capital gains tax got beaten back. We've taken our short-term hits on the severance side to right size the size of government and the resulting regulation that you take to get things done.
Right.
We've maintained our reputation as a socially progressive nation somehow, and it's once again recognized in combination with Waterloo, places like Waterloo and the different pockets that I referenced earlier, as a great place to do startups and graduate them into mid-sized company with the odd outside outlier that knocks the ball out of the park. And we're back to rocking and rolling on an ecosystem that we've laboriously built over the last 15 to 20 years.
Love it. Yeah, and I love rock and roll too. That was amazing, Bruce. Thanks very much for doing this, and certainly you and your staff are leading the charge. We're pleased that our investors get to be a part of that, and so thanks very much. Happy holidays to you and everyone in your world. Our guest today has been Bruce Croxon, managing principal with Round 13 Cap, one of our partners here at McNichol and Associates. Thanks for putting this all together. Thanks very much. Have a great day.
You too, guys. Thanks.